And now to our first conversation with most global equities markets in bear territory and risk assets getting sold off due to rate hikes and rising inflation. What are the investment options catching the fancy of investors right now? Let's have this conversation with Tajuddin Ibrahim, Director, Research and Strategy, Chapel Hill Denham. Great to have you on the program. Good morning.
Good morning. Thank you very much for having me on.
Right. So central bankers are doing all they can to tame inflation. We're seeing global markets, they've been hit hard with most of the risk assets, looking pretty bad, at this time. The markets follow your expectations?
So yes, I think largely speaking, the market has responded in line with our expectation. When we look at inflation, we already flagged it at the beginning of the year that inflation at the start of the year will most likely be sort of, slow, and then towards the middle and in the second part of the year, we are most likely going to see higher inflation. And I think the fact that we have the war between Russia and Ukraine, that is even making the outlook for inflation more worrisome. And in terms of response by global central banks, by hiking interest rates, my sense is that that is in order. And we also have seen where the Central Bank of Nigeria also raised interest rates as a form of response to the rising inflation. So market, broadly speaking, has sort of responded in line with what we expect. And if you restrict these to the stock market, I would say that the market has overperformed our broad expectations for year 2022 so far.
And, investors are constantly on the lookout, for the bottom when we're talking about global stocks and, most of these assets that have been sold off. We've also seen Bitcoin also being hit hard. Do you think the bottom is close for most of these global stocks?
Well, I think generally speaking, for global stocks, if we take a global view at stock markets generally, I would not say that they have bottomed out yet, because we still have rising inflation across the world, and we still expect more central banks to increase interest rates on the back of the higher inflation. So when the outlook for interest rate is further to the high side, and you wouldn't expect the equities market to rebound up until when we begin to see a bit of a slowdown in the rate of rate increases, or we begin to see a complete reversal of monetary policy tightening. In terms of reversal, I think we are not there yet. It is not yet time to begin to see a reversal. But in terms of a slowdown in the rate at which global central banks are increasing interest rate, I think we may have that much later in the second half of the year. But my sense is that it will, largely speaking, be dependent on the developments around the war between Russia and Ukraine, and how the war further exacerbates the outlook for inflation. I think, generally speaking, the stock markets across the world have not really bottomed out, in my view.
And it seems, most of these markets are hinging on, inflation peaking, at some point. But do you think there's some kind of time frame, for inflation to actually peak globally? Is there some sort of a time frame, maybe in 2 years, a year, that we can actually expect, okay, at this point, inflation will actually peak?
Well, I think if we take a 6-month view at it, and this is talking about December of this year, my sense is that inflation most likely will remain elevated. But when we go into 2023, particularly the second part of that year, with the expectations that there will have been some positive development around the Ukraine, Russia war, then we could begin to expect inflation to start to moderate from, most likely the second half of next year, and that most likely will be driven partly by the high base that we would have seen in 2022. So in terms of time frame, next year looks more like it, but it most likely, in my view, will be the second part of next year.
Right, I know most investors are looking forward to that scenario, but we've seen commodities, do pretty well, from oil and most of the agricultural commodities. Do you think they're still up for more gains?
Yeah, yes, I think there is still more, more room for them to gain further. And, I think the starting point is for them to begin to defend some reasonable level. For instance, crude oil prices, we expect, will comfortably defend the $100, per barrel level, in the market. But, if we see further tension around, the Russia and Ukraine war, we could see oil prices move as high as like, $150, dollars, per barrel, which is something that, some economists across the world, have called for. So, but if we do not see further tension and we see some increased some increase in supply across the world, then particularly in the U.S. and also among the OPEC countries, then, we could see a bit of a slowdown for crude oil prices, for instance. But my view is that, it can comfortably defend the $100 dollars per barrel level. For other commodities, the expectation will be for increased output. If we have more output in terms of the commodities, then we could begin to talk about a slowdown in their prices, and that slowdown is unlikely to also materialize up until the first half of 2023. Looking at this year, we most likely are going to see increased demand, particularly as we move into the festive season, in the fourth quarter of the year. So any sort of slowdown in food commodity prices most likely will be in the first half of next year, after we have seen a surge in supply, in my sense.
Right. Well, we'll keep tracking those commodity prices. They are looking pretty good, at this point. But Mr. Tajudeen Ibrahim, I still want you to hold on. We'll continue the conversation in just a moment.
This is Channels Television's breaking news.
And breaking news reaching us right here at Channels Television. We see the Chief Justice of Nigeria, Justice Tanko Muhammad, has resigned. Sources told Channels Television judiciary correspondent Shola Soyele that he resigned last night on grounds of ill health. Information also has it that arrangements are now on to swear in the next most senior justice of the Supreme Court, as Justice Olukayode Ariwola, as the acting Chief Justice of Nigeria. Reports also indicated that a formal announcement will be made shortly. Until his resignation, reports had it that Justice Tanko Muhammad was seriously ill. Only last week, 14 justices of the Supreme Court had written him a letter to lament the decrepit state of affairs in the court. We'll have further details as we get them. And now let's carry on with the conversation. We're still looking for where investors can push into, at this point with inflation beating most assets at this point. We still have Mr. Tajudeen Ibrahim, Director of Research and Strategy at Chapel Hill Denham. Thank you for staying on.
Thank you very much.
So what would you say is the best investment to beat inflation, right now? Something that matches, inflation surge?
Well, I think, the starting point, in a search for, an investment that will beat inflation is for investors to look at foreign currency investment. here talking about the US dollars. When you have investment or a substantial exposure to, the US dollars, for instance, you will realize that you are better positioned than holding, local currencies, because we have, a higher inflation in the US, and that is currently being tackled by an increase in monetary policy rate, and that is leading to an increase in interest rates and also increase in yields on dollar-denominated instruments. So if we invest in US dollar instruments and you have up to 3 to 4% yield on that front, if you capture that and you capture a possible currency devaluation on your local currency, you most likely are going to beat inflation, particularly if you take a long-term view at your investment. The second view in my mind is that investors should look to invest in those drivers of inflation, and one of them is crude oil. So when you are invested in companies that are into crude oil, they are in the positive terrain as we speak in terms of their free cash flow. And Seplat is a very good example in that regard. It has gained about 98% year to date. So, those are the causes of inflation, which is, rallying commodity prices. So you should be in those commodities that are driving inflation as they are rising in terms of price appreciation ahead of the general level of inflation. So I think investors should look in those directions. Also look at companies that generate foreign currency. Airtel Africa is a very good example of that, and I think investors have been substantially rewarded because that stock has gained 84% on a year-to-date basis. Those two stocks that I mentioned have recorded substantial return way ahead of inflation, which is around 17.7 as we speak.
Right. I guess if you cannot beat the inflation drivers, I guess you have to join them at this point.
Absolutely.
But, cash is often overlooked as an inflation hedge. Some analysts say, while cash isn't a growth asset, it will usually keep up with inflation in nominal terms. What do you think?
So cash, I think I have a different view, because if you hold cash, what it means is that you are generating some sort of low interest rate on it, on your local currency, and I think that wouldn't at any point in time catch up with inflation on a 12-month trailing basis. But if we are holding cash and the cash is foreign currency cash, then you may have a bit of an hedge in terms of how much of your risk you have hedged against. But even holding foreign currency cash is not the best. I think you can put them in short-dated instruments that allows you to get them back as quickly as possible when you are in need of liquidity. I strongly suggest that money managers look at storing value in foreign currency, and also not keeping them as cash, but keep them in short-dated instruments that can allow them to access them when there is a need for liquidity, in my opinion.
Right. Then what would you say is the best strategy to profit from the fixed income market at this point?
So for the fixed income market, if you take a local look at the market, I think the best strategy is for you to stay at the short to medium end of the curve, instead of you taking duration risk at this point in time, because the outlook for interest rates in Nigeria, for instance, is still more to the upside, particularly considering that in the second half of this year, we have much lower liquidity in terms of maturities. We also are going to see the government most likely borrowing more, and borrowing more probably will require some incentives to investors, which will come in form of higher yield yields on those instruments. So when you are at the short to mid part of the curve, it will give you the opportunity to invest at higher yield over the coming quarters by the time interest rates further reprice, in my opinion.
All right. Well, just briefly before I let you go, what's your outlook for most of these asset classes moving forward?
Well, for most of the asset classes, I think the outlook for equities for me is sort of mute. Because the stock market has moved significantly above our expectation for the full year. It is well around 20% and above in terms of year-to-date return. Meanwhile, we are looking for 16% return in 2022. So we may see a bit of a slowdown on the equities front. On fixed income, I think the outlook is positive in terms of higher yield. The same thing applies to money market instruments. And on commodities, I think the outlook is also positive, particularly considering our expectation that oil prices most likely will defend the $100 per barrel level over the next 2 to 3 quarters.
All right, so much to chew on there. Thank you so much, Mr. Tajuddin Ibrahim, Director of Research and Strategy, Chapel Hill. Dan, it was great having you on the program.
It's my pleasure.
All right, now after the break, I will take a look at Nigeria's risk frontier market status. We'll see if we're going up or we can actually maintain that, or maybe going down. We'll have that conversation after the break. Just stay with us. This is Business Morning.